Hello, Dr. Paul Cleveland with Boundary Stone, and we're here to provide you with resources to understand your world and to engage better with it. And today what I'd like to talk to you a little bit about is our modern day banking system, commercial banking system. You know, in 2008 we had a financial collapse, and the result of that, we blamed bankers for taking undue risk in the market, and so our Congress passed the this piece of legislation, the Dodd-Frank bill, and anyway, that piece of legislation, supposedly was going to ensure that banks would take less risk and be more wise and prudent in their investment strategies. Well, is that really true? Actually, more regulation, oftentimes that's not really the answer, because it doesn't ever really get at what was the root of the problem to begin with. And really, that particular piece of legislation, I think the result was it only ensured the greater consolidation of commercial banking in the U.S. That is, banks would get much bigger and there'd be fewer of them. So that's not going to result in the kind of system where necessarily less risk are taken. In fact, if we look at the whole thing that led to the 2008 financial collapse, there were a number of factors involved. First, it could not have happened without the Federal Reserve inflating the money supply. Under Alan Greenspan, right after the collapse of 2000-2001, was encouraged to put his foot back on the monetary accelerator, which he did, and provided fuel for the fire. Now, where did the fire come from? Well, obviously a lot of this went into the real estate market because real estate prices became overinflated. Now, the question there is, why did that happen, and what was the process there? Well, a couple of things important to note. One, laws passed to promote commercial or residential lending in poor neighborhoods, and in order to promote home ownership there, were part of the issue, and obviously loans being made to people who were not as creditworthy as others might have been. But that wasn't the whole of the bigger problem. Was we had a couple of institutions, Fannie Mae and Freddie Mac. And what Fannie Mae and Freddie Mac do, these were government-created enterprises. Now, they were theoretically supposed to be private and operate that way, but the way in which they work is they use their resources to go out and buy mortgage contracts. They'll keep some of those contracts with themselves, but then they'll package those contracts and issue bonds on the underlying basis of the mortgages themselves to pay off the bond issue. Now, here's where things got dicey. Fannie Mae and Freddie Mac got to the point where they were willing to buy anything. They didn't care about the credit worthiness of the borrower at all. So what this did is it set in motion what economists refer to as moral hazard. That is, mortgage lenders no longer really had to care about the credit worthiness of the borrower. 100% financing, no credit check, come on down. And the reason why they were willing to do this was that they weren't going to keep the bonds. They weren't going to keep the mortgage contracts. They're going to sell those off to Fannie Mae or Freddie Mac. And so that led to the great uptick in what's called subprime lending. And many of the banks and other institutions that were buying up the Fannie Mae and Freddie Mac mortgage contracts did so under the theory, under the notion, and that push come to shove, the federal government would bail out Fannie Mae and Freddie Mac, which in fact they did, though they were not supposed to. And so that was in the toxic asset repurchase plan that was led in 2008 at the height of the collapse. And so Fannie Mae and Freddie Mac got bailed out, big bankers got bailed out, everybody got bailed out, and the taxpayers were put on the hook for all this stuff. Now, therein lies your problem. It's not, we need to get government out of this business. They have no business getting involving themselves in these things. Some of those banks should have just failed and leave it to those that were wiser in their strategies to succeed and to prosper. Well, I hope this has been helpful to you to understand our past and understand the future going forward. Once again, Paul Cleveland, Dr. Paul Cleveland with Boundary Stone, and providing you with information resources to understand your world. I'll see you again next time.